Hi there, and welcome to the technical analysis category. In the previous lessons, I've covered the basics of Forex. And the basic lessons that I've explained are very important for your trading journey. Now, we're going to go even deeper into charts and how to analyze them, which really is the most important aspect of trading. So, you're probably wondering, how do I read the charts? How do I find opportunities to trade? And how am I going to predict what's going to be the next direction of the market? Should I open a buy or sell order? There are going to be other questions too. Let me start though by explaining how to read charts and what the most important factors are when reading the charts. You may have heard the term technical analysis. Now, technical analysis contains many rules and ideas, all of which I'll cover in detail later. But first, let me give you a quick introduction to technical analysis, otherwise known as price action. Now, technical analysis is the study of market charts, whether it's a candlestick chart, a bar chart, a line chart. However, we're going to focus more on the candlestick chart because it's really the most popular one. Technical analysis offers an in-depth analysis of the market by allowing you to read the trend of the market, whether it's bullish or bearish. And this will give you a good indication of whether to go long or short in the market with a buy or a sell order. And besides the trend direction, when you analyze the Forex market using technical analysis, you can also identify market chart patterns. You probably don't yet know what a market chart pattern is and which market patterns should be identified in the charts. And for that, I have dedicated an entire category to the different types of patterns in the markets, so not to worry. The category covers many chart patterns, so you'll have a better understanding of the market patterns and how to use them to identify potential buy or sell orders. But as a short introduction to market patterns, do note that they are a very important aspect of technical analysis. And by applying technical analysis in charts, you'll be able to identify different market patterns. Besides the market patterns that can be identified using the technical analysis, support and resistance can be identified using technical analysis as well. Now, support and resistance levels are crucial factors in technical analysis because they're going to show potential continuation or reversal of a trend. So to identify support and resistance levels, you can draw horizontal lines. The lesson about support and resistance lines will be covered in the upcoming lessons, and I'll teach you how to draw those lines. So let's get back to technical analysis, which allows you to read the past chart data and identify the potential upcoming movement of the market. The past movement of the market can be decisive in your trading decisions. For example, when you use technical analysis to analyze the charts, you really start to understand when you should exit a trade that you currently have in your trading account. And it helps you understand when the probability of going in the wrong direction might be higher. This will also short your losses by reducing the amount of loss, which of course could affect your trading account balance if you didn't analyze the chart using a technical analysis. The time frame is just another aspect of technical analysis, and in a previous lesson I've covered time frames in switching to a different time frame to analyze the market, whether it's an hour or 4 hours or another time frame. And that allows you to identify potential reversal of the trend or the continuation of the current trend. Besides the factors that I just mentioned, which are part of technical analysis, there are many other factors in trading which can be used with technical analysis. To identify the current trend of the market, whether the price of the market is rising or falling, you can apply trend lines or channels. Now, trend lines are used to identify an uptrend, which is a bullish trend, or a downtrend, which is a bearish trend. And when you draw trend lines to identify potential continuation movement of the market or the change of the market, known as a reversal, you can then decide whether to open a buy order or a sell order in the specific point. And if you're wrong about the trend, you'll touch your stop loss and cut the loss. But if you're correct about the trend, you can then increase the stop loss to the next level and ride on your winners. Technical analysis offers the opportunity to really understand if there's a supply or demand in the market. And you probably know what supply or demand means and their effects on our daily lives, right? If there's a low demand for a product and the supply is high, that might affect the price. For example, during this coronavirus pandemic, the price of 1 barrel of oil went down below $20 US for a couple of weeks. And that was because of the high supply, despite the low demand. Therefore, if there's a high demand for a product, but the supply is low, the price of that product will increase. And in the same example, that it applies to the Forex market. When you identify a supply zone in the market, it's most likely to occur that a downtrend will begin, as most traders will sell in a supply zone. And remember that by using a stop loss, you're limiting your losses. So if you're wrong, you can avoid big losers on your account. But the same applies to the demand zone. Traders will buy from that zone, so the price will go up. Now, in the supply and demand lesson, I'll explain in more detail the use and the importance of supply and demand in the Forex market. This was just a quick introduction to supply and demand, which is an important factor in understanding technical analysis. Another important factor which helps traders analyze the charts as part of the technical analysis aspect is the technical indicators. Now, technical indicators are tools that are used to help traders analyze the volatility or the momentum of the market, as well as the direction of the trend and other tools. And technical indicators are important factors in technical analysis, as they can be combined with support or resistance, market patterns, and other technical analysis factors. In the upcoming lesson, I'll explain in more details the technical indicators, how we set up indicators in the trading platforms, as well as the impact of indicators in trading. I'll also focus on some of the most popular technical indicators in the Forex market. In this quick introduction to technical analysis, I covered the most important factors, so now you're aware of how to read the charts using technical analysis. In the upcoming lessons in this course, I'll show you how to use technical analysis tools such as trend lines, channels, other lines, and other tools for truly reading the charts. For now, let's move on to another important analysis, the fundamental analysis.